Good morning, Mitch Lichterman at Target Rate here with a weekly rate update. Well, it's been about a week now since the big Wall Street crash, roughly 1,000-point drop over a couple of days, up and down market. Surprisingly, the market has rebounded and got back most of the losses, but it's still a very, very, very nervous time period. Interest rates came down upon news that the Fed is going to keep interest rates fixed and low without change for the next 2 years. But since all this topsy-turvy turmoil, what's happened to the marketplace? Well, interest rates have inched up slightly, roughly 0.1% across the board. 30-year fixed rate today is now at 4.25% with 0 points. That's just up 1/8 from the low when the market crashed a week ago at 4.125% with 0 points. In fact, all across the board, all interest rates on all programs have inched up by 0.1%. That goes for the 5-year fix, the 15-year, the 30-year, conforming jumbo, FHA as well. FHA is at 4.25 with 0 points. The only rate that actually stayed consistent was the super jumbo. Those are loans from $729 up all the way to $2 million. That interest rate has remained fixed at 4.875% with 0 points. So, what does that mean to you out there? Well, if you're one of the borrowers that's already refinanced, your credit's excellent, you're probably not going to jump on the bus right now. You've probably already gotten a pretty good rate. If you're one of those borrowers who hasn't been able to do something, maybe you didn't have equity in your property, maybe some other situation wasn't quite right, now might be the time to consider doing something. And if you don't have that equity still, and who does, the FHA may be the best answer. FHA will go up to roughly 97% of the property value. Now, if you're on that fence and you've been waiting for the right time to lock or apply, what does 0.1% really mean to you? Well, not a whole lot in the long term. If you had a $350,000 mortgage, 30-year fixed today would be a payment of $1,721 per month. If you had locked in a week ago at the low, the payment would have been $1,697 a month. So we're talking roughly $24 a month that you would have saved if you had capitalized and got on the lowest of the low. $24 a month over the long term is not going to be a substantial difference to you, especially if you consider adding the Mortgage Saver biweekly payment program, where you're going to make up and more by simply accelerating the payoff of your loan. A 30-year loan will pay off roughly in about 25 years. That's it from here at Mitch Lichterman's office. I look forward to hearing back from you. Thank you.